Hey everyone, it is Jay Soloff from Investors Alley, and this is our options trade of the week. So I am at marketchameleon.com and I'm looking at the options volume page. So it's just a list of the most active contracts, option contracts trading in a given name. Usually you have something like SPY up here, of course Tesla and Apple. These tend to be near the top, heavily traded. You can see their volumes are quite heavy. And Apple, and this is before the actual close, but it still generally trades 1.5 million, and it's still trading over 1 million, and this is considered a slow day. But 1 million option contracts is obviously a ton. So let's actually dig into that a little bit here and see what's going on in Apple. We have some interesting stock contingent trades. That means the options are tied to stock. And one here that is catching my eye is this one here. It's for January 2022, so it's about 13 months, and you can see that it looks like it's stock contingent, and it looks like it's a covered call. So it looks like the trader bought the stock for 122.73 and sold the 170 calls about 13 months away for 590. So in this trade, and of course we know Apple is a heavily traded stock. It's one of the biggest companies in the world, and it's done well this year despite the pandemic, and continues to be a popular company that pushes out new products. But the thing about Apple though is that it doesn't pay much of a dividend. As popular as it is, it's more of a growth stock. It only pays a 0.7% dividend for the year. So what this is likely is a covered call that is meant to add to the yield from holding Apple. So by selling this trade, for selling these 170 calls for 590, this person is adding about a 4.8% yield for a little over a year. So it's not quite, it's not quite 5% a year. It's probably closer to 4.5% on an annualized basis, but that's still significantly higher than what the stock pays as a dividend. The other thing here is that the calls were sold at 170, which means the stock can go up another, $47 or so before it gets capped. And so that's another potential, 25-30% gain. So this is an interesting trade in that it could have been done for a higher yield if it was done closer to the stock price at the time. But clearly this trader is also looking for potential growth in Apple besides adding that additional yield from the call. That's essentially a huge increase to the dividend. So I think that's a great way to do it, particularly if you want to hold the stock for potential growth. The high is 137, so this is giving it plenty of growth, all the way up to 170 if it has a good year next year. And so that's a nice benefit to selling an out of the money call. So if we look at it here, we can find it January 2022. It's all the way over here. You can see not a whole lot of volume that far out, but in fact, let's see here. We are looking for the this is the one we want right here. Yeah, there is there is some volume, actually more open interest than I would have expected. But looking at the 170 here, that was the big trade today. It was 1,500 calls and only 1,600 traded. So most of them were in that one trade. It hasn't really moved all that much. So if that's the sort of thing you'd be interested in doing, it's you could do it in two separate transactions. A lot of times you could do it in one trade: covered call, covered stock, buy right, where you're buying the stock, you're selling the call against it, and you just pay one price for the whole thing. So you'd be paying 117, and you have the ability to earn up to 170. Meanwhile, that sale here for whatever it's being calculated at here, 575, 580, is essentially used as a yield, is almost a dividend payment. So if this is the sort of thing you're interested in, if you want to learn more about covered calls, there's a report you can download. It's right below this video. You can click on it, get a free report, and get started with learning about covered calls.